So this is a training video to just teach you, if you've never known what a stock chart looks like before, I want to just teach you how to interpret some of the things. So when I'm going over the market update every week or whatever, you can see a little bit more of what I'm talking about, and it doesn't look such a lot of gobbledygook to you. This is just a simple stock chart I'm going to start off with of Apple. It's a stock you're familiar with. And this is really nothing any different that you might see that you went to school and you learned about. On the bottom along here you've got time. This is obviously the months, April, May and June and so on. And up the scale here on the right hand side is the price of Apple as it goes along. So as you see, month by month, here's the price on a simple graph chart of Apple. I'm sure you know how to interpret that. But every time I look at a stock chart, that's really what I'm looking at, with just a few extra fancy bells and whistles put on there to help us and try and get a bit more information, make it look a little bit more precise. But don't be intimidated by the sort of stock charts I show up, because it really just boils down to this. So I'm going to add a couple of things now, change a couple of things as we go and explain it so you can see what it is I'm talking about. First of all, I'm going to change this, what is a solid line here of the price, to something called HLC bars. And what that means is it's just going to tell me, instead of just this line going on, it's saying a little bit more information day by day. HLC means the high, the low and the closing price. So if I just home in on one of these little bits of information, for example, let's just look at this black one here like that. What that's saying is that how this line has gone up and down like that between looks like about 103 to 106 nearly. What that's saying is during that day, looks like on about September the 12th, the price of Apple fluctuated between about in this range. So that's saying that the market opens, and as soon as it opens, when it closes, it's fluctuated in that range on that day. This little horizontal line there means that's the price Apple actually closed at, and that's the most important price to me. I mean, I am interested in what's going on during the trading day, but what really matters is that little peg there horizontally, which it looks like Apple closed at around almost 106 on that day of September the 12th. So that's all that's saying. I know it looks a little bit complex, but that's really all that's going on here. Day by day, you've got two pieces of information. Three pieces of information really. The peg is where it actually closed out, the most important thing, that horizontal bit there. And the upper part of that little pole there is with the highest it got during the day, and the bottom part is the lowest it got during the day. I'm going to add a couple, something else now, which helps me, called a moving average. This is just the average price over time. So if I say, okay, I'd like a simple moving average of the 50 days, which I've got selected there, and then the moving average of, say, 200 days. So that's saying over the last 50 days, what was the average price, and what was the average price over the last 200 days. So here you see it showing up on my chart here. The 50 days shown up there, the blue line, there's the legend up here, 50-day moving average, and the 200-day moving average. So the 50-day moving average is in blue, and the 200-day, which is obviously a longer term, it's over the last 200 days instead of the last 50 days, is down there like that. Why do we use these? Because they're a gauge of the health of a lot of these stocks. So if it's below the 50-day moving average down here, you literally can say on the short-term moving average that Apple is literally below average, So that's all. When you see those lines in the market update there, it's just an average price of that stock. And if the average price is pointing up and the stock's above it, like here, that stock's in a much healthier position up here than it was, say, down there, because it's above both of its major averages, and the average itself is pointing upwards. One more little thing I look at, which isn't as important, but it's volume. And that's when you see these little bars down here whenever I look at a chart here. All this really means is that how much power there is behind the buying or the selling. For example, here you see with Apple, there was a lot of buying came in. So this price, you can see it went up over these days here, but there was also a lot of conviction behind it. You see these bars here, that means the big banks are really getting behind it and buying Apple stock. Think of it as, this is a car trying to get up a hill, and this is the amount of RPM gauge, the amount of RPM that's being applied to pushing that car up the hill. So high RPM, cars moving, that's healthy action, Conversely, though, we see high RPM here, sending the car backwards down the hill. Obviously, something's broken there. So that's really the basics of how, when I look at a stock chart on the weekly updates. Thank you.